Peter Cardillo, the Chief Market Economist at Spartan Capital Securities. Peter, thanks so much for joining us today, and a very good evening to you. Let me start off with the first question, of course, on these tariff measures. What do you make of these tariffs on Canada and Mexico? And while this has been known, the new 20% tariffs on China that we've seen today, what is your first reaction on the same?
Well, the first thing we know is that Trump meant business. He wasn't bluffing. And the taxes begin today, and that means higher costs for many products that come out of Mexico, especially Canada, agricultural products in particular. So that means the sticky inflation that we have here in the States is going to continue to worsen, and most likely we're headed for a severe dose of stagflation.
You specifically see, while we had some commentary also from corporates like Walmart after their Q3 earnings that, inflation might be there because of, while a lot of it is imported from Mexico and Canada, I think 1/3 is what they pointed out. What is your analysis in terms of inflation going forward? Do you see, because of these measures and because of probable reciprocal tariffs from these countries as well, especially the likes of Canada and Mexico, what is your analysis in terms of this, and how could the US corporates, would it be a pass-on effect with a lag? But do you see that in the short term there could be a lot of uncertainty going forward?
Well, in terms of inflation, it maybe, just maybe, and I'm not sure that this is going to happen rather quickly, but now that these taxes, these tariffs have been levied on Mexico and Canada, there's a good possibility that they may come to the bargaining table. And so if the tariffs don't last too long, then I think we could probably escape any serious rise in inflation. If, on the other hand, the tariffs should last, and we wind up in a trade war between Mexico and Canada and China, then of course inflation will be headed higher, and it's going to just complicate the Fed's work even more. So I think this is the situation all depends on how long these tariffs last, and if, as I said, Mexico and China decide to come to the bargaining table.
Now, specifically, Peter, we've seen a couple of industries as well as, Mr. Trump being very vocal for manufacturing in the US. Now, Apple has already announced its plans of about capex about $500 billion. While a lot of it might already be in play, I think that's been one thing. And apart from that, we're also seeing that within the automobile sector, specifically Honda coming out with mentioning that, one of their models, such as Civic, will now be manufactured in the US instead of Mexico as the earlier plan went. Do you see within autos as well as the supply chain as a whole being affected, apart from electronics companies such as Apple being one of the major companies that could be affected because of these tariffs?
Yeah, well, eventually they will be affected, and we will have bottlenecks, and this will take us back to the times of COVID. How severe they'll be, I'm not quite sure. Again, it all depends whether or not these new tariffs imposed will lead to a trade war. But we can expect bottlenecks. We can expect the supply chain to be broken, and it takes time to gear up manufacturing in the States, so it's not all that easy. And we'll just have to wait and see what the end results are. But certainly, the market's reaction indicated that it could be a serious problem in terms of inflation.
Just one final question from my side. In the past, we've seen the debt ceiling of the US being hit, and the Biden administration had increased that limit. But Trump has been very vocal about with Dodge coming in they've been very vocal about what they feel of increasing debt of the US is. So do you see that as a measure going forward, a similar tactic to what the Biden administration did of raising the debt ceiling, or is there something else that you are anticipating?
Well, the cost cutting by Trump is basically going to cause unemployment to spike. We saw a dose of that last week when jobless claims spiked up to 22,000. So we're beginning to see the effects of these job cuts that um, the administration has begun, and that means that we'll see more and more of these layoffs finally showing up in the claims, and that means that the employment market is going to weaken. So that's another problem for the Fed. Um, they're going to have to make a tough decision. What do they do? Do they halt um, the employment market from weakening to the point which could point to a recession, or do they fight inflation? Well, we just have to wait and see what they decide to do. Right now, I think it's actually a little too early to really see the end results of this. As I said before, uh, just have to wait and see if countries that have been affected with these new tariffs come to the bargaining table. If they do, obviously these tariffs will be removed, and it could actually blossom into good prosperity for the
Right.
United States. So we just have to wait and see.
Right. Well, Peter, thanks so much for joining us today and giving us a lowdown on what you make of these Trump tariffs. It's a topic that we'll have to talk about a lot more going forward as well. But thank you so much for joining us today.
Thank you.